Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So we've got some pretty exciting action in the overnight gold market here. You can see overnight, as markets opened in Asia, we had the price of gold surging by more than $50 to a high of about $21.50. The price has pulled back fairly significantly from there. Right now, the chart you're looking at is for the February contract for gold, and you can see it remains just above $2,100. So is this the big breakout? Well, we're going to have to wait and see. Tomorrow, if we get a close above $2,100, it very well could be from my vantage point. But I want to talk about this move and some of the implications here. Is it the big breakout? What is driving this surge in the price of gold to an all-time record intraday level? Will silver move along with it if it is the breakout, and if so, how high will it go? Well, let's get right into it. The first thing I want to say is this chart we're looking at, as I mentioned, is the February contract for gold. And this, just based on comments I've seen, there seems to be some misconceptions about the spot price of gold, how it's determined, etc. So real quick, let's try to clear that up. Sometimes you'll see a futures contract instead of the current month contract quoted as the spot price, and you'll see different spot prices quoted in different places. Well, let's take a look at the COMEX here, the CME group, and you can see that they have spot gold listed as the same thing as the February contract. Now, there is the December contract, which is trading slightly lower at $2,088, and sometimes you'll see that talked about as spot, and that's really the spot market because it's the current month's contract. But one thing you'll notice about the February contract for gold, which is trading at 2107 right now, is that the volume is 85,876 contracts, whereas the December contract has only got a volume of about 196. So really, this is essentially the spot price. It's the most liquid price. It's the most frequently traded contract. So for anybody who sees different spot prices quoted out there, that I hope explains why we see that. Now let's take a look at the chart of gold here. This is the long-term chart on TradingView. We've got this long-term cup and handle formation that we've been talking about drawn on the chart here, a very bullish formation. Now, this should be a very bullish chart for anybody who is familiar with this pattern, because the idea here, you get a long consolidation, you get a handle. Once you break above that top part of that handle, it's off to the races for the price. Now, the only thing I'll say that we're a little bit premature with here is we need to see a close above this line. Now, we did see a small close, or just a close right at it, basically, on Friday when gold closed at an all-time record high for a daily close. But now we're trading above that. Now, we went way above it in the overnight, as I mentioned, but we've come back. So tomorrow, again, wait and see. If we see a close above $2,100, a solid close in the spot price, we very well could be seeing a massive bull market in its nascent stages here. We could also pull back. Maybe we might even come back and even test this lower boundary. Even if that happens, I think we're still going to see this chart confirmed eventually when the Fed begins to cut. But we may see gold take off before that. Now, let's talk about what is driving this move. And I haven't really seen any definitive confirmations about what caused gold to spike up in the overnight, but I have some thoughts on why that might be occurring. One thing is this increase in naval activity in the Red Sea. We've got 3 commercial ships attacked. I actually mentioned this in the live stream earlier today, but we're getting some more information here about these attacks on commercial shipping vessels in the Red Sea. Now, the Houthis are claiming responsibility, so as we had anticipated, this is related to the Yemen military there. And the interesting thing here is the response from U.S. Central Command. So apparently the U.S. downed 3 drones in the Red Sea, shooting down some of these drones, which are being used to attack commercial vessels. And then the response here from U.S. Central Command sounds fairly ominous. These attacks represent a direct threat to international commerce and maritime security. They have jeopardized the lives of international crews representing multiple countries around the world. And then this is the part that looks like it could be the prelude to a broader regional conflict. We have every reason to believe that these attacks, while launched by the Houthis in Yemen, are fully enabled by Iran. The United States will consider all appropriate responses in full coordination with its international allies and partners. So, that is a problem if this leads to a broader regional conflict. So, could geopolitical instability be the cause for the surge in the price of gold? Well, certainly very possible. It could also have to do with the Fed, who is now anticipated to cut rates several times in 2024. Markets are pricing that in. We have got the bond market, which has been on a significant rally ever since the lower than expected CPI numbers that we received. And it just seems like the markets are expecting the Fed is going to print a lot of money. And guess what? I mean, the U.S. debt is at $33.8 trillion. The deficits are at a massive level, record high peacetime deficits. The Fed is going to have to print. We've got a commercial real estate sector which is on the verge of collapse. We've got many insolvent regional banks here in the U.S. So, yes, the Fed will have to run the printing presses. That could be why gold is spiking up to new all-time highs. Let's take a look at this article here from Bloomberg, which says bond market euphoria shifts to debate over how low the Fed will need to go. So, let's see. A torrid bond market rally shows traders are convinced the Federal Reserve's rate rising cycle is over. The debate now turns to when bankers start cutting and by how much. So, the thing that will determine how low and how quickly the Fed cuts is going to be how much of a soft landing we get. So, how many of you out there think we're going to get a soft landing? Put a 1 in the chat. Put a 2 if you think it's going to be one of the worst economic calamities of all time, because that is, from all sides, what we are heading towards. We have massive levels of debt, delinquencies are on the rise, layoffs are beginning. The job market that's so strong that the Fed chairman Powell keeps citing, it's basically a bunch of people working second and third jobs trying to make ends meet. And this time the difference is that inflation is already very high. So yeah, put a 2 if you think that we're going to get negative economic outcomes from these rate hikes rather than a soft landing. I don't think a soft landing is in the realm of possibilities any longer. But now let's talk about silver, because silver was up just like gold overnight. It actually went up over 26 bucks. Its rally was not as marked as that in gold, but still a pretty good rally. But you can see it's pretty much pulled all the way back now. But I want to talk about how high silver could go if gold does break out this time. And whether gold breaks out this time or whether it's next year when the Fed begins to pivot. I mean, I know months can seem like a long time when you're living through them, but it's really a very short period of time. And there is a gold breakout on the horizon. I'm convinced of that. It's just, is this it? Is this the big one? And it could be, but I don't have a crystal ball. I don't know for sure. But if it breaks out, how high is silver going to go? Because as you can see, I mean, gold is at a new record all-time high right now as we speak. Silver is well below its nominal all-time high of about 50 bucks. Hit that back in 2011, also at that high in 1980. But I know everybody just likes to talk about the Hunt brothers when we discuss the numbers from 1980. So, let's just use the 2011 high. But silver still very, very far. It would have to double basically to get to those all-time highs. So I think silver is, a good buy here. And let's talk about how high it could go. So let's take a look at this page here from SD Bullion. By the way, if you do want to buy some gold or silver, make sure you check them out with the link down in the description. But they have some pretty interesting data over at SD Bullion. They've got historic prices, so you can go back on their site and you can get the price for gold and silver daily prices for any year going back quite far. We can take a look at the price of gold in 1980, and I want to draw your attention to this because this is a previous high in gold. And actually, this is still really the all-time high in gold. January 21st, 1980, gold closed at $850 an ounce. So if you adjust that for inflation, even using the CPI, that's still the all-time high for gold. In fact, we can do that right now, and using this inflation calculator from the U.S. Bureau of Labor Statistics, we can see that $850 in January of 1980 is the equivalent of $3,361 today. So, we're still pretty far away from that target with gold. We would need to see a significant rally to get to that point. And if we see gold break out of that cup and handle formation, it's kind of interesting that the way that you determine how far gold will move up when breaking out of this pattern, you take the difference between the bottom of this, which is around is that around $1,000, give or take about 1,050, and the top here, which is around 2,100. You add that to the top level, and that gives you a number of what, like around 3,100, 3,200, and so that's very close to the inflation-adjusted all-time high for gold. Well, if gold goes that high, where is silver going to go? Let's take another look at a chart here from SD Bullion, the gold to silver ratio chart, and just going back to the last bull market, we're not even going to talk about 1980. We're just going to talk about the last bull market in 2011. You can see the gold to silver ratio got down to about 33 at that time. So if gold goes to 33.61 and we get a gold to silver ratio, because when the bull market really kicks off, the gold to silver ratio tends to decline. We see that in previous bull markets. No reason to think that this precious metals bull market would be any different. We would see silver at $100. Now, in 1980, the gold to silver ratio declined below 20. So $100, I think, that's just using the inflation-adjusted all-time high for gold. The Hunt brothers weren't manipulating gold in 1980, so that's a pretty valid figure. And the gold to silver ratio that we hit in 2011, then you would be looking at a silver price of $100 minimum. That would be kind of the base case, and I think that that is well within the realm of possibilities. If you adjust silver's all-time high, which was $50, now I know people are going to say Hunt brothers, but I mean, listen, the gold was hitting a record high at the same time, so obviously there was more at play in 1980 than just the Hunt brothers. But if we use that price of $50 in 1980, you can see the all-time inflation-adjusted high for silver is closer to $200. So yeah, I mean, 2024, I think that's when we're really going to see the breakout in gold from this pattern play out. It could be beginning right now. I mean, tomorrow, we're going to see what happens in the gold market. It could very well surge higher. If we get a close above $2,100, I think it's going to be $3,000 is the next stop. You know, and in what time frame? Well, I'm not sure. Again, I don't have a crystal ball. Will there be volatility? Sure. Are there going to be dips where we can buy? Maybe, maybe not. Maybe there won't be any opportunities to buy lower than right now. I don't know. If the price dips, I'm going to buy more. I might buy more on the way up too, because, you know, $3,000 I think is, again, also a conservative case for gold, considering all of the fundamentals. You know, how much money the Fed is going to be printing next year, how easy they're going to have to get, how bad the soft landing, quote unquote soft landing, is going to be. And I know we get some folks in the chat here very pessimistic, saying we'll never see $100 silver. Silver can never get to $30. Well, listen, when you see people in a stacking channel, a stacking community espousing that kind of a sentiment, I mean, that is kind of what you would expect to see near the bottom of the silver market, right? You would expect the most diehard people to have a negative view, because once they have a negative view, once stackers are saying silver will never hit $30, there's nobody left to sell. And you know that mainstream investors are not buying silver right now. And if stackers are believing that silver can't go up, then that is a contrarian dream come true. You know, that makes me want to go buy more silver if I've got stackers in the channel saying that silver is never going to hit $30. I mean, that is confirmation that we are near the most negative sentiment you will see. And soon, when the Fed begins to print and inflation begins to run out of control, those mainstream investors, they are going to be looking at precious metals as a store of value. That is what is going to drive the big price movements. And listen, I'm not telling anybody what to do. This is not financial advice. I'm not a financial advisor. I've been stacking gold and silver in anticipation of this bull market for close to a decade. And look, I mean, if you don't think that silver and gold are going to go higher, don't buy them, right? If you're going to, if you say, well, I'll believe $3,000 gold when I see it, I mean, that's fine. It's just, you know, you're going to miss out. And this isn't FOMO. I'm not even trying to get you to buy gold or silver. I don't care what you do. You can go stack Pop-Tarts. You can stack MREs. You can stack copper. You can stack fiat paper. You can buy Beanie Babies. It doesn't matter to me. But look, if you're waiting for like a crash or an opportunity to get in, you might just be left waiting with a bunch of fiat currency in your hand that is going to be devaluing rapidly. And again, it's not financial advice. I'm not telling you what to do. I'm telling you what I am doing. And look, if you think gold and silver are going to crash from these prices, let me know in the chat how big your short position is. Let me know how much money you're going to make from that move that you know is coming, because if you know they're going to crash, then obviously you must have a significant short position. Anyway, let me know what you think in the comments down below, everybody. How high do you think gold is going to go? Do you think this is the breakout, or is this a head fake? Is it going to take something bigger to drive the price to new all-time highs? How high do you think silver will go when that happens? Love to hear what you have to say. Thanks for watching, everybody. Appreciate everybody who tunes into these live streams. Appreciate the support of the channel. Share this video on social media. Don't forget to smash that like button. And stay safe and happy stacking, everybody. I'll catch you next time. Smart Silver Stacker.